Yes, guys, what is going on? Welcome back to the channel. It's that time of the week again. It is Sunday afternoon, so I'm bringing you another weekly technical analysis video. Let's just go ahead and jump straight into the charts here. We are going to start off on a daily time frame for the Russell 2000. Now, you can see that we had a really nice movement this past week. Let's actually zoom out to the weekly time frame. Gained 5%, 5.25%. So you can see really strong starting off on Monday the 9th. Kind of this big wick came up to our 200 moving average, rejected off, and then just 4 consecutive days of really strong green movement. Now, we are approaching our top of the channel here at 1923, so I think that we will see that interaction at some point this week, so keep an eye on that. We might get a rejection off of it, coming back in this downward direction towards our support line. We could also break above. I really have no idea what the markets have in store. I'm not a prophet. I'm just a trader. But like I said, this is a level we've rejected off of it several times before. It's clearly a pretty significant level, so watch that interaction quite closely. Going over into the NASDAQ, looking at some tech stocks as well. Kind of the same thing, came down to the bottom of our channel. Really strong movement up. Ended the week, let us see, up 4.5%. So not quite as strong, but still really strong movement. Got above our 20 moving average and our 50-day moving average. Zooming in just a little bit, you can actually see that on this final day too, on Friday the 13th, we did kind of wick down to the 50 moving average and then closed really strong above it. So that's a pretty solid bullish indicator. Tells me we've got a lot of buying pressure forcing price up, and again, might have an interaction with this downward sloping trend line. We might not see it. You might get a little bit of sideways action. I couldn't say for certain that we see it this week, but it is getting a little close, so watch out for that. And of course, the 200 moving average above that. Other than that, really not too much. This is kind of an interesting level at 903, which is very close to where this is going to intersect, if I had to guess. So I would think that that 11,900 level is going to be very important to watch. Jumping over into the Dow Jones, you can see, I'll be real with you guys, I pretty much called this one. We've regained this supply zone, caught a little retest, bounce off, and have pushed just straight up into this line right here. So we are sitting right on that line, about 40 points off of it currently, which is a very insignificant, amount for the Dow Jones. So I would really like to see what happens now. Are we going to see a rejection back off down towards our supply zone down here, or do we just continue higher, break straight through it? If we do break straight through it, I would once again look for a retest before an entry for a lock position, but this is obviously going to see some interaction this week, so definitely keep an eye on that. Whether or not we get rejected off or break straight through it, once again, I could not tell you, but obviously, like I said, we saw some previous resistance, even going back here to August of last year, pretty much interacted with the exact same level. So keep a very close eye on the Dow Jones, especially at the open of the week. I would definitely want to see how this interacts. We might gap straight up, we might reject off. But we do also have our 50-day moving average kind of coming up, supporting us a little bit. So if we do reject off, I would look for support on this blue line or this green supply zone. Really quickly, we are going to take a look at the US dollar, the DXY. Obviously, it got absolutely hammered this past week. Some really ugly red candles here. Pretty much came down to this 101 level that I was talking about previously. Haven't quite touched it yet, but very close. And that is the reason that you saw stocks have such a strong positive week. It's because the dollar was getting weaker. So with that in mind, with the dollar getting weaker, let's take a look at our trade of the week. We are looking at Airbnb. Now, I have a couple of lines drawn out already. You can see we have this downward sloping trend line. Just broke it last week on Thursday, had another solid close on Friday. So what I'm looking for, and I will even draw out my long, or where I would long this, I would go long right at about 103. So 103, you're gonna get this little micro gap back over here from November 16th. You'll see that little micro gap close. But what I'm really targeting when I'm going long at 103 is this area at 131. Yes, we do have the 200 moving average coming down. I think that could potentially cause some type of stalling action, maybe even some type of slight retracement. I will be able to provide more information when we get a little bit closer and see that interaction. But I think that this 130, 131 level, zooming out just a little bit, you can see we have 1, 2, 3, 4 touches. Obviously this gigantic fair gap as well. And so, you know, I would maybe even be a little tentative with this as your take profit. I do think that we are definitely going to see at least some type of short-term rejection off of it, but it might just be a little bit retracement. We come back down to maybe 124, 125, and then finish closing this gap. Obviously, you know, we'll actually measure this out. Big fair value gap here for about that's about $25 on that fair value gap. So if we did break through 131, I would look for this gap to close, take it up to about 150, 153, somewhere in that vicinity. But this, obviously, this 131 is going to be first. I really do think that we'll hit some type of resistance on it. And like I said, waiting for that 103, that to me would be a better entry. You could enter right now if you wanted to. Honestly, you could have entered on, you know, the break of this trend line. I was not aware of it at that point. I only searched for the trade of the weeks, you know, before I filmed these videos. So I might be a little late to the party. I do think this is a solid setup. As far as downside protection, let's see, if you're entering at 103, I would put it below the 50 moving average, maybe 93. 93 would give you a little bit of downside protection. You'd be below the trend line, below the 50 moving average, below this little micro support structure right about here. And so if you set it at about, maybe even to give it a little wiggle room, maybe set it at like 92. But either way, really solid risk to reward ratio. So that's what I got for you. That's everything. Thank you guys so much for watching. Go hit that subscribe button. Go hit that like button. Have a fantastic week, and I'll see you guys later. Peace out, homies.